This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hello, everybody. We're going to talk about the market today, going through the S&P and the QQQ. Want to make mention that I have a new show that's going to be starting next month on Stock Charts TV. Taking stock requests and going over some things on their 30-minute show every week. So hopefully you guys want to tune into that. I think it'll be a lot of fun. So we're going to talk about the S&P and the Qs. I'm going to look at it a couple different ways, and I am going to update the market conditions. So let's go ahead and get going. The market conditions. So again, I'm going to go through the trend and momentum in a second. One of the main things that happened for the week that I think is relevant and important is the volatility is now above a rising moving average. So if we look over here on the right, this ATR has made a pretty big jump in a very short period of time. Now, this is on the daily chart, and the moving average is now rising. So we've shifted this to a little bit more dangerous position. I would consider that to be a negative right now. And you can see how quickly it takes place. You can also see that the levels where these places turn or where we start to see volatility seem to increase as well. It's kind of interesting. So and then also the overbought condition that we have been talking about for the last 2-3 weeks has quickly come down to around 52, 53. And there's still some more room to pull back. So we're going to talk about that in a second. The sentiment did drop down to 41%. So there's 41% more bulls than bears. So it's still at a pretty elevated level, but it is starting to come down from its highest peak. So, I guess that's a positive, but I think there's still a little work to do. Typically, when you get up into the high 40s like this did, that you normally will work your way down to 30 or under 30, or even sometimes we see it a lot lower than that before it really turns into a new buy signal or really confident buy signal. For now, it might just keep churning in here and trading between the high and the low 40s. We'll just have to see. But those are the areas where we're looking for, and they give you better signals. So up in the upper 40s and overbought. Is a little bit more of a dangerous area. It's why I was saying over the last few weeks that we probably want to be a lot more selective. And maybe if you're going to buy, maybe do like a half size position, smaller positions. As I've been saying, I've been looking for a little bit of a pullback. When we look at the difference between what the S&P and the QQQ is doing, I think it's pretty significant. So let's go ahead and look at the trend now. And I want to do this first looking at just the three trends together. So this line here is an 18-day moving average, this like purple line. The blue line represents the 18-week moving average, and this gold line, yellow line is a 18-month line. So what we can see here is that, again, in this during this period, there have been times where we've come down and tested this 18-week, but we haven't broken it. We haven't turned it over. Even though we broke it here, it never actually lost its slope and rolled over. Same thing here, and this time it didn't even reach it at this point. So those are all, I think, signs where you're basically pulling back to an area of support, and it's survived. It looks to me like we're breaking the short-term line, and if we rally up here and fail, so I'd be looking for something along the lines of a rally up to the moving average and then a turn down from there. That would really increase the odds that we're going to test this 18-week line. And so that's just something we want to be on the lookout for. I'm going to go in a little bit more detail on the hourly in a second. But I just wanted to kind of point this out because we can see where, the blue line is getting separated away from the gold line. So the 18-week, the weekly trend is getting kind of separated away from the monthly trend. So from a bigger picture standpoint, we're getting a little bit overdone. But if you look at it from short to intermediate term, there is a little bit of room to pull back, and it could just be like what we've been seeing for the last several months, which is just another pullback to the 18-week. The key is how it reacts here at 39.50 to 4,000. Is this something we got to watch? Now, if we look at the same picture, same moving averages with the QQQ, we can see we went up here and failed up at the high, broke the moving average, and then look at exactly what I was just describing. You see how this rallied up and failed at the declining moving average right here. So this is what I'm talking about right there. We rallied back up and failed, and then you set the stage for a test of the blue line. Now look what's happening. We're breaking the blue line, and the question now is, are we going to do one of these? So we come down and then rally up and the blue line rolls over, sort of tops out here. If we make some kind of a topping pattern like that, that sets the stage for something really scary. So, again, I'm not big on making predictions. I don't feel like I need to. Look at what happened. Each time this came down into this zone, you never rolled over the blue line. You never turn that blue line over. The trend is to the upside. So, we had the sell-off and now the rally back. The rally back will be very important to see. If we come right back up through the blue line and keep it flat or rising, then I would say we're still in kind of the same boat that we have been, although it's probably more of a neutral trend on this QQQ. Let's go ahead and look at the S&P in 4 different time frames. And I'll do this somewhat briefly. If you look at what the monthly chart has done, you've made this big push. We've now come down to the 4MA. If you remember a couple weeks ago, I said that there's a pretty good chance we should come down and test this. The fact that it didn't get too far away before reversing, I think, is the reason why it's sort of stabilizing at this line. Now, if we break this 4MA, that again sets the stage for maybe a deeper pullback on the monthly. So, we just kind of want to be on the lookout for that. We still have not taken out a prior month's low, and it's been a long time. It's been several months since that happened. So that's something we want to be on the lookout for. Let's go ahead and look at the weekly chart. And again, this is the chart that I think is still in command here. 18 and the 40 are rising at about the same rate, and we continue to hold on a pullback. So we have a little bit more room to get to this 18-week line, 39.75, something like that. And again, the reaction to that will be really important. If we bounce right off it again, I think there's a pretty good chance that it's just kind of business as usual. If we break that line, then we should be looking for something a lot more significant over the next few months. Really not much of a change in terms of the momentum on this time frame. On the daily chart, because we had such a sharp decline and that increased the volatility, we also had, look at the MACD. So, I want to zero in on this so you can see. Look at how price went to a new high and the MACD actually pinched underneath. So this is a divergent pinch. This is one of the first videos I ever did on this channel. I talk about this divergent pinch play, and that is when you go to a new high here and MACD not only doesn't make it to a new high, it is underneath, it stays underneath its signal line. So that's usually a pretty good sign. So on that red bar, that was a pretty strong signal. Also notice how since that we've had some follow through to the downside. Red DI has taken over dominance here. We've got red above green. Now, how long will that last? I mean, for all I know, the red's going to come dropping right back down below 25. If it doesn't hold, then it's not that significant. So we really want to look at this hourly chart, because what I like to do is I like to look at where there's been kind of a key level. And I mean, this to me is the key level right now. And even though it's on an hourly chart, I think it has implications that could be a lot more important, because this found support here briefly, and then a nice pullback to support here, found it again here, and then found it again here, and then found it again here, and then finally broke through the ice, if you want to call it that. And now we've rallied back up to the ice 2 times now and haven't been able to get back above it on a closing basis. So 41.25 on the hourly chart. So that area I think is really important. I think if we can get back above that, then that probably sets the stage for kind of like a trading range. If we fail right here, the 80X on the hourly, I think is telling you there's more downside coming and that there's probably a pretty good chance we are going to go test the 18-week line. And so that's kind of where I am right now. I'm sort of leaning towards that taking place. But let's see how this reacts right around this 41.25 level, a very key level for the S&P chart. We'll go back to the 4 timeframes and then look at the QQQ. And again, we can see the same pattern on the monthly chart. Look at how extended it's gotten. It did it in a more excessive fashion than the S&P, which we've been talking about for months. And we're already starting to see a loss in momentum a little bit. You can see how price went to a new high and then failed. Now we're coming back down through the 4 MA again. And taking out a prior month's low again. And again, that should increase the odds of more corrective action in the near term. Let's look at the weekly chart. So the weekly chart went up and tested last week. And I said, I thought there was a pretty good chance that we're going to spend more time sort of in a range right now. And, I think the level to watch here is 300 on the Qs. It's probably more like 300 to 305, something like that. But it does look, we're below the 18-week right now. It's tried to lift off it a few times intraday, but hasn't really been able to get a real reversal. And it just looks a little heavy. So we might actually get a full-blown test of a bigger support area. Also, I want to point out, look at how different the MACD looks. Even though price went to a new high here, a minor new high, we made a significantly lower peak in the MACD, and ADX couldn't even lift off the 25 level. So this is what I've been talking about for the last few weeks. It's the reason why the QQQ, I think, has been a little bit more vulnerable in the short term, and the reason why I brought up that QQQJ, which is the next generation Qs, and that's still struggling to lift off, really not performing very well, especially when you look at it compared to the S&P chart. So let's take a look at the daily on this QQQ. Again, because it looks like a trading range, I think, next support area is probably around 310. But if we get going to the downside, I think the bigger test level around 300 to 305 is really what this wants to do. Notice the negative DI strength and the volume, confirming that there's a problem here. If we can get back up through 325, 326, 327, something like that, then that could neutralize this pattern. But for now, I think just based on everything I'm seeing, that there's probably a little bit more downside risk in this at this point. Now, if we look at that fall through the ice pattern I described, this took place at a much higher level for the Qs. So we came down and found support here. I've got this off just a little bit. So found support, and then gapped through it, and then tried to get above it momentarily, and then got right back down below. So I think that's kind of a key level. And then we had a pretty big drop from there. So again, the momentum signs are pretty negative. We just have to see how this reacts. I think, probably somewhere, again, 325. We can look at this little box right here. 325 to 327, I think is kind of a key level for this index. If we got back above that, then this could it's going to be sloppy, I think, if it does, but it'd be a little bit more of a neutral pattern if that takes place. I think anything below that, I think puts this in a position to continue to struggle in the near term. So anyway, post any questions and we'll talk to you next time.